You've got a fancy saying. Mine is much better. Owning a business in the United States of America is like being able to legally steal from the government.
If you don't own a business, I'm telling you, man, the tax code is for business owners. We've said this 1,000 times on the show, guys. Like, especially in Illinois, dude, you're getting whacked hard, man.
Yeah.
Oh.
Yeah. So what I recognized was that she was one of, I'm sure, so many of small business owners that just didn't know what I know.
Right.
And that's where the idea was born from. I was like, I can help so many people get out of their own fucking way.
Why do you think that people don't know? Is it because
I just think they're just not educated because we're too busy learning about parallelograms in school
Trapezoids.
and trapezoids when we don't know the difference between like a balancing an asset versus a liability.
And you see that all the time in your line of work?
Dude, if I had $1,
Yeah.
I'd be in Bora Bora right now.
If you had $1, you play poker with it probably and win to
If I
one
had
place.
$1 for every time I met somebody that was like, wait, that's a write-off? Like,
Oh,
we'd be filming this
So
in
let's
Bora
dive
Bora.
into write-offs a little bit. Like what can you write off? What can't you write off?
So
Is
yeah,
there-
I mean, like I don't know if you've been following me on social media.
you gotta follow. We're gonna put links in the description. Make sure you
But
follow.
if you have been, you'll have noticed that there's been a 30-day series of 30 things I bet you didn't know you could write off.
I love
Because
Yeah.
there are things that people don't realize they can write off. Here's an example. If you use your cell phone to respond to clients, to check your work email, to check social media for your business, like your Two Stunads podcast.
Two Stunads.
Two Stunads. And you have to say it like two. You can't say two. It has to be like Two Stunads.
Two
Yeah, like you
Stunads.
got to say it with the hand,
Two
right?
Stunads.
Yeah, exactly. Then part of your cell phone bill is a write-off. Bet you didn't know that. Your home Wi-Fi, it's part of it is a write-off if you use it for work, right? Like there are
course we
so
do.
many things you use for work that you don't realize, especially as a small business owner. Drew, obviously you know these things. Because if you don't, I'm going to have to kick your butt.
no, I do. We
But
take
there
advantage
are
of
so
them.
Here,
many things that
some
you
of
can
our
get away
viewers
with, right?
Don't know these things. So let's keep digging in.
Okay,
Like
so advertising and promotion is a write-off. Your fuel is
Right.
either mileage or fuel,
Yeah.
whichever one
That's
is
a
greater.
big one, dude.
That's a huge
Don't fucking
one.
double dip because
Do
of whack you.
not. Mm-mm.
Okay.
Nope, you will get, it won't be good. But you can depreciate the asset of your vehicle.
Yep.
So if your vehicle was $100,000, you can depreciate it either all in 1 year or you can do it over the course of 3 years, depending on how much of a write-off you need.
If you own it, yes.
If you own the vehicle and you're using it for work.
I prefer to lease just because you can write the whole
whole
fucker off.
fucking thing off. Exactly.
you know,
some people don't like to lease.
You know,
Some
my
people.
wife's car, she likes it. She wants to have it, forever. So we, we bought it or whatever. But
Fair.
there's two sides to it. Instead of just doing fuel or mileage, guys, like fuck it, I'm just going to do the lease, write the whole thing off.
Yep.
Yeah.
And then again, in 2 years, I could get a new car.
Yep.
And
Yep.
you got to figure out what the numbers are, how much you're
And it
spending.
also depends on what you do too,
Yeah.
Drew. Like,
Yeah.
I mean, like to that point, like the guy that's out there selling art festivals, his entire vehicle is a write-off because
Sure.
he uses it to get from point A to point B to point C and point
Right.
D, et cetera. Me, on the other hand, I'm better off personally writing off fuel because I drive a whole 6 minutes to
Yeah.
the office, So it just depends on the business. And so I personally work with, what am I at now? 52 companies, 51,
Wow.
52 companies. So part of it is knowing too, like, who can I write this off for versus who can I write that
Yeah.
off for? Whose Home
Different
Depot expenses or cost of goods
corporations,
sold
yeah.
versus whose Home Depot's repairs and maintenance. And so, I
Well,
mean,
categorizing is huge.
So that's where I kind of come into play. So, everybody thinks, oh, well, I can just automate it. No, you can't.
Yeah, if you're using QuickBooks
QuickBooks thinks
online
it's smarter than you.
and it
it's not.
automatically categorizes it, dude, you got to be careful because you might have an Amazon charge, but they don't know, like when QuickBooks like processes it, it just plugs it into the category that you've already assigned it to before. But it doesn't know, okay, is it groceries? Is it, did you buy an item for work, toilet paper, whatever,
Right.
And that's the downside. That's why you got to be on top of that stuff because
That's why
God
you have to hire a
forbid.
good bookkeeper.
Yeah.
Is there a threshold? Like, I only spent X amount of dollars on gas or mileage or whatever. Like, is it like, it's kind of thrown in, it's part of the return or whatever? Or does that make
Standard.
sense? Like,
No,
a standard?
so standardized deductions are when you're more of like a W-2 employee. But when you are a business, you want to scrutinize every penny because at the end of the day, like I said at the beginning, like owning a business is like being able to legally steal. The point of that is that it's being able to hold on to as much of your hard-earned money as possible,
Right.
right? So like if you are taking your employees out for lunch, you should absolutely write that off because
I'm on board.
yeah, I mean, but it's true. I mean, they're really, everything I do is 100% legal. I mean, I know I'm saying legally stealing, but I mean, like, it's 100% by tax code. Like, I know what you can and can't get away with. I know what is and isn't a write-off. Sorry, your Louis Vuitton bag is not a write-off, but
Makes sense.
But it's good to
the
have
Amazon
non-write-offs too.
purchases. Mm-hmm.
It's good to have non-write-offs.
Yeah, absolutely. But that just becomes an owner distribution.
Exactly,
So you can still buy the Louis Vuitton,
exactly.
but I'm just not going to run it through the profit and loss statement.
Yeah.
So it's knowing what's an asset, what's a liability, what's an expense, what's a cost of goods sold, what's overhead, what's, all of the things. So